Futures down today. The Dow coming off a 3-week slide, the S&P off a 2-week slide. We are seeing rates on the rise. What are you expecting from the action today and including tomorrow until we get those Fed minutes?
I think this normalization process is going to continue for a little while longer. What we've had for such a long time has been a disconnect between what the Federal Reserve has been telling us very, very consistently, meaning rates are going to be higher for longer, and the market for a very long time just didn't believe what the Fed was saying. And so when we came into this year, we had a really nice rally in the equity markets, but fixed income has pretty sharply turned to pricing in what the Fed has been saying. Equities, on the other hand, have only started to do that. So the higher duration, lower quality parts of the market still have room to come down.
All right, so I want to talk to you about riskier assets. Investors have continued to have a lot of faith in these riskier assets. I think the poster child for it may be the ARK Innovation ETF, up 30% year to date, far outperforming in the month of February, where we've seen some stocks take a bit of a slide. And that rise has been with rates rising about 50 basis points from their low in mid-January. How much longer do you see this trend continuing, and what can stop this trend of risk on, as a lot of people call it, but just investors being interested and confident in higher risk assets?
I think we're starting to see that change right now. It made sense when we started this year to have a change. Risky assets were really, really oversold heading into this year, but we've gone too far too fast. And so that's why when I talk to clients right now, the main message is don't chase the market higher. You know, the market needs to start rewarding fundamentals, and the equity market needs to properly be pricing in Federal Reserve expectations before we can start to sustainably move higher. So when you have areas like low quality, you're having earnings revisions not being rewarded, you're having short interest being rewarded in the market, that's just not a really solid footing for the market. And so lean into what should be working right now. Even though we have a higher probability of a soft landing, you still want to own profitability. Valuations still matter. Free cash flow still matters in this market. And so you can still own some tech. Just own higher quality tech. And if you want to be looking for an area to add risk in this market, what I've been advocating to clients is look to small cap equities. Small caps have so vastly underperformed the broader market for a very long time, and they finally have the opportunity for earnings expansion and margin expansion that's going to exceed that of large caps. So if there's an area from a valuation perspective, I think small makes a lot of sense.
All right, this is Worldwide Exchange. We mostly focus on the U.S. markets, but I want to talk the global markets for a second. You're very bullish on the European stocks, specifically the SXXP that tracks the top stocks in Europe. Why are you switching your focus to Europe in particular?
So when you look at value and you're trying to find value in the market, Europe definitely is a much higher value built market than the US, and it's lagged the US for a longer time. And so within Europe, I don't like the entire market. I think some areas have gone too far, too fast. But one area within European equities that I think looks very, very interesting are European banks. They have vastly lagged the broader market and European markets for really the better part of a decade. And what you're finally seeing with rates moving higher and really real rates moving higher, European banks have been posting really good quarterly profits, increasing their guidance moving forward, and they're a larger weight within the index. So if you're looking overseas, if you want to get some higher quality value exposure, I'd say give European banks in particular a much closer look, because I think there are opportunities there.